Hello, my friends. In this video, I'm going to explore the benefits of using candlestick patterns in technical analysis and introduce a powerful tool that will help you effortlessly identify these patterns on your charts. Candlestick patterns have long been one of the most reliable and effective methods in technical analysis. They assist traders in predicting market movements and identifying the best entry and exit points. Patterns like the pin bar and engulfing can signal strong reversals in trend direction, offering valuable insights into future price action. Mastering these patterns can give you a significant edge in your trading strategy. With this indicator, not only can you identify these key candlestick patterns, but you can also use them to recognize support and resistance levels on the chart. Additionally, by analyzing the patterns and high-volume candles detected by the indicator, you can gain a better understanding of where liquidity is positioned in the market and which areas on the chart the price might react to. This ability to identify liquidity zones and potential price reactions allows you to anticipate movements more effectively and enhance your trading decisions. At the core of all candlestick patterns lie two fundamental patterns, the pin bar and the engulfing candle. These two patterns serve as the foundation upon which many other candlestick patterns are built. Complex patterns such as the morning star, three-candle formations, and other engulfing setups can, in essence, be traced back to the behavior and characteristics of the pin bar and engulfing candles. By mastering the identification and interpretation of these two key candlestick patterns, traders can easily recognize more advanced patterns and develop a deeper understanding of market sentiment and potential price reversals. Moreover, this indicator helps traders secure additional confirmation signals before entering a trade, as it alone should not be used as the sole basis for decision-making. For example, when used in combination with other tools such as the Smart Money Assistant indicator, it can help highlight which fair value gaps or order blocks are more significant, further improving your ability to prioritize key market zones. However, identifying these patterns in real time, especially across multiple time frames, can be challenging. That's why we've developed a custom indicator for cTrader that makes this task simpler and smarter. This multi-timeframe candlestick pattern indicator detects key patterns such as pin bars, engulfing candles, and high-volume candles directly on your charts. It allows you to set precise alerts, so you'll be notified whenever these important patterns emerge, eliminating the need for manual, time-consuming chart monitoring. In the rest of this video, you'll learn about the key features of this indicator and how to set up your alerts efficiently. Stay tuned. Once the indicator is installed, a user panel will be added to the chart. You can move the panel around by using the gray button, and by clicking on the panel's header, you can minimize it to free up space on your chart. If you select the ENG button, engulfing candles for the current time frame will be displayed based on your settings. Activating the bell icon next to this button will set an alert for when an engulfing candle forms in the selected time frame. Why is engulfing candle detection useful for traders? Analyzing engulfing candles on the chart is important. When an engulfing candle is formed, or when the price is within the range of an engulfing candle, and also when the price breaks through an engulfing candle, it may signal an opportunity to enter or exit a trade. The presence of an engulfing candle here indicates that there is a possibility of liquidity in this area. And when the price consumes the liquidity above the engulfing candle, it may move in the opposite direction. And again, you can see that this has happened once more, and after consuming the liquidity in this area, the market has moved downward. When an engulfing candle forms, you should pay attention because it may move the price. Similarly, you can see here that an engulfing candle has formed, and after a few candles and liquidity provision, the price has continued its movement. And again, you see that this pattern has repeated itself. I need to analyze further to understand which engulfing candle is more important than the others, and which one might be less significant. In this price area, you can see that several engulfing candles have formed, and if I turn on the pin bars, you will see that there are many pin bars as well. The presence of these signs tells me that the market was looking to gather liquidity in this area. So this price zone could be important in the future. Even here, we could have risked entering a buy trade by seeing this pin bar candle and then this engulfing candle in this area. All of these signs could have convinced me that the market maker initiated an upward move in this price area. And a breakout of this zone could indicate a trend reversal. It doesn't matter which time frame you're in. Right now, I'm in the daily time frame. Even if you're in the 1-minute or 5-minute time frame, candlestick patterns can guide you. The presence of several engulfing candles in this area could have convinced me to enter a sell trade. A powerful and flawless engulfing candle has formed in an important area, and if I had entered a buy trade after its close, I could have made a good profit. Another bullish engulfing candle has formed in this area, disrupting all the expectations for the continuation of the downtrend, and could have provided a good buy opportunity for us. However, things are not always this simple. You see a nice and clear engulfing candle here, but the market intended to deceive us and was seeking to gather the necessary liquidity to move in the direction of the higher fractal. No strategy in the market is completely right or wrong. We need to combine the simplest strategies to understand the chart's language, which is the hardest language in the world. We need to understand the fractals and know the market trend in the higher time frames. Analyzing the market's past is easy. This is what I'm doing now. But my intention is not to analyze the market. I just want to show you the capabilities of the engulfing pattern. The key point to note is that engulfing candles that form in the direction of the trend are more important, and those that form against the trend are less significant. In this area, there's a bullish engulfing candle that indicates the presence of liquidity below it, and the market, after entering this area, has gathered the necessary liquidity for an upward movement. To avoid making this video too long, I won't analyze the chart in a multi-timeframe manner, but note that all these analyses should be multi-timeframe. That means you shouldn't trade just by seeing an engulfing candle in one time frame, and the price position in higher and lower time frames is also important and must be analyzed. An obvious uptrend has started from here. As I mentioned, bullish engulfing candles are more important in an uptrend. In this area, an important engulfing candle has formed. As you can see, the market, after moving below it, gathered the necessary liquidity for an upward movement, and these bearish engulfing candles, including this strong bearish engulfing candle, formed due to important economic news, led the price to this area. Here we also see other examples. But as I said, it's not that simple, and identifying the correct signals in a live market requires a lot of practice and further analysis. As you can see, a large engulfing candle has been identified during the last hours of the New York market, which, if we had entered a trade after its close, would have turned into a terrible and exhausting trade. Similarly, pressing the pin button will show pin bar candles for the current time frame. If you activate the bell icon next to this option, you will be notified when a pin bar forms. Why is pin bar detection useful for traders? Pin bar candles can, in some cases, be even more important than engulfing candles. It doesn't matter whether these candles are bullish or bearish. When one of them forms on the chart, you should pay attention. Like engulfing candles, pin bars can be significant in any situation. Whether they are formed, the price reaches them, or the price breaks through them. For example, from this pin bar candle on the 4-hour Euro USD chart, I could have realized that this is an important price area. And after hitting it, the price could experience a sharp drop. To be more certain, I also check it in a lower time frame. And as you can see, in the 1-hour time frame, 2 more pin bar candles had formed in this area, each potentially indicating an important price zone. I could have taken the risk of entering a sell trade at these 2 areas. It doesn't matter what method you use to analyze the chart, but you should know that pin bar candles are important and can give more credibility to your analysis. Here, a flawless and powerful pin bar candle has formed in line with the higher time frame trend, which could have provided a good bullish signal. As you can see here, a bearish pin bar candle has been identified, and after the market positioned itself above it, it gathered the necessary liquidity for a downward movement. Here, a bullish candle has formed, and after gathering liquidity below it, the price beautifully continued its upward movement. In general, it's important to spot pin bar candles on the chart and pay attention to them. A pin bar candle has formed here, and I'm marking it to move to a lower time frame. As you can see, in the lower time frame, Two bearish pin bar candles have formed, indicating that the price has gathered good liquidity for a downward movement and could start a bearish move. Considering these important pin bar candles, I conclude that this area is an important price zone. Here, you can see a small reaction. I will extend this zone to monitor further reactions. As you can see, the price has stopped in this area, and by carefully analyzing the pin bar candlestick pattern, I identified this price zone. Moving forward, as you can see, another pin bar candle has formed in the same area, which could give me clues about whether the downward trend will continue or if the price will reverse. It doesn't matter what time frame we're in. Even in the 1-minute time frame, pin bar candles are important and should be noted. As you can see here, several pin bar candles have formed in this area, indicating that this could be a significant price zone. I mark this area, and as you can see, good reactions have occurred at this price level. Here, a powerful pin bar candle has formed in the direction of the higher time frame trend, which clearly could have alerted me that the price might continue its upward trend. For further confirmation, if I had turned on the engulfing patterns as well, these engulfing candles would have given me more confidence to enter a buy trade. When you select the HVO button, candles with high volume will be displayed on the chart. If the bell icon next to it is active, the indicator will notify you when such candles appear. Why is high volume candle detection useful for traders? Now I move on to high volume candles. Many traders overlook these candles, believing that the volume is not accurately reflected. However, we don't need the exact numbers, we just need to know which candles have high volume. Next, I'll show you a few examples of them. Let's go to the weekly time frame on the EUR/USD chart. If we analyze the high volume candles here, we can understand why the price has been stuck in this range for a while. And if I highlight this weekly high volume candle, you'll see what has prevented further downward movement in this currency pair. If I switch to the daily time frame and examine its high volume candles, we can understand why every time the price reaches this level, it reverses downward. All of this demonstrates the importance of high-volume candles. It doesn't matter which time frame you're in. By carefully analyzing these candles, you can gather valuable information about the chart and key supply and demand zones. This is the same area I previously marked with a pin bar we found earlier. The presence of these bullish high-volume candles could have provided us with a good bullish signal. To see more significant high-volume candles, I'll increase the sensitivity a bit. As I mentioned earlier, this is a price channel in the 4-hour time frame, so this bearish high-volume candle may not be very significant for entering a trade. However, these bullish high-volume candles could be much more important. Still, the presence of this bearish high-volume candle, along with this bullish high-volume candle, shows that a significant price zone has formed here. By marking this area, we could have concluded that the price might react well to it. As you can see, the price is currently within this price range. These bullish high-volume candles, which align with the market fractals and were created at the right time, could have provided good buy signals. It may not seem like an important candle, but this high-volume candle, along with the engulfing candles that followed, gave the market the liquidity it needed to push the price upwards. The combination of these three tools can help you better understand the language of the chart. Again, here we see a high-volume candle from which the price moved upwards. I repeat, these signs alone cannot be profitable and do not provide sufficient reason to enter a trade. It is better to combine them with your own strategy. If you're familiar with my indicators, you'll recognize this next button. Pressing it will display a list of previously triggered alerts. This is useful if you're using the indicator on multiple charts and are not actively trading when an alert is triggered. The list helps you identify which currency pair and time frame the recent alert pertains to. Note that alerts are triggered after a candle closes, and only if the candle meets the specified conditions. The indicator operates in a multi-timeframe mode, meaning settings for each time frame are saved separately. For instance, if you've activated the bell for engulfings on the 1-hour time frame for EUR/USD, you'll receive an alert whenever an engulfing candle is detected on that specific time frame, regardless of which chart or time frame you're currently viewing. The indicator's settings are straightforward, and I'll now walk you through the basic setup. In the notification settings and event settings sections, you can configure when and how alerts are displayed. These settings are consistent across all my indicators, and I've explained them in previous videos. To keep this video engaging, I will move on to the next parts. In the engulfing section, the minimum engulf body size option allows you to set the minimum body size of engulfing candles, which is 80% by default. This means the indicator will only recognize candles where the body makes up at least 80% of the total candle size. If set to 100%, it will only display full-bodied candles. The next option lets you specify that the volume of an engulfing candle should exceed the average volume of the previous candles. This helps filter out less significant engulfing patterns. If you enable Marking Last Engulfing, the indicator will only display the most recent engulfing candle to avoid cluttering the chart. The final two options are for setting the arrow colors that indicate the direction of engulfing candles. When an engulfing candle is detected, an arrow will appear above or below the candle depending on its direction. In the pin bar section, there are three important options for filtering pin bar candles. 1. Minimum pin bar body size. This allows you to set the minimum body size of a pin bar candle as a percentage of the total candle size. By default, it's set to 3%. This helps avoid detecting doji candles. 2. Big tail compared to small tail. This option determines how much larger the long tail of a pin bar should be compared to its short tail. Tail factor. This defines how much larger the long tail should be relative to the body of the candle. By default, it's set to 3. There are also two options for configuring the colors of bullish and bearish pin bars. When a pin bar is detected, the indicator will only change the candle's outline color based on whether it's bullish or bearish. For high-volume candles, both the outline and fill color will change. If your chart uses black and white candle colors, you'll easily spot the identified candles with the default indicator settings. However, if your candle colors are customized, you can adjust the indicator's color settings for better visibility. In the volume section, two options are available for filtering high-volume candles. 1. Average volume calculation. This option defines the number of previous candles to consider when calculating the average volume. 2. Volume factor. This setting determines how much larger the volume of a candle should be compared to the average of previous candles. Candles with volumes twice as large as the average of the previous 20 candles will be detected as high-volume candles. There are also options to configure the colors for these candles. In the panel settings, you can adjust the transparency and button size of the user panel. Additionally, you can specify how many alerts should be stored in the indicator's report section. Please note that using this indicator alone cannot provide the necessary confirmations for entering a trade, and you should combine it with your own strategy to increase the success rate of your trades. Test the signals from this indicator in backtesting to gain proficiency in using it. Thank you for watching this video. Good luck and win.